You're welcome to the second episode of the Project Payout, and this one is gonna be a value bomb because since the last video I got tons of lessons, I learned a lot, and yeah, let's jump straight to this video. As you can see here, my monthly P&L is not looking that great, and yeah, there's a reason for it. My win rate also cooked. Before Friday, it was even worse because I lost all the progress from the previous month, and yeah, there is a reason for it. I'll explain everything what I did wrong, and that you don't repeat these mistakes. So as you can see here, it started from the second week in month of April. I got a losing streak, and here on these days I probably took trades on my evals, but I don't track that. I only track my funded account, and yeah, they're probably losing losses. And yeah, what I did and why I lost those trades, let's go to my journal. So let me just see when did I upload the last video, so we can go and cover everything. So let me check what was the date. 3 weeks ago, bro. Tell me the date. 28th of March. Okay. Let's go to 28th of March here in my journal. And 28th of March, 28th of March. Yeah. That was it. Yeah, here, as you can see, this was my account balance then, and this is my account balance right now. I got to 51k, and yeah, then I got back to almost 49k, and right now I'm seeing that around 50k. So yeah, I'm back. It's almost like a fresh account, but I have this drawdown, so $1,000, and yeah, here I was learning about order flow, auction theory, all of that. And don't get me wrong, like these things, they work great, they are fine, but I wanted to make my strategy, my model that I learned from my mentor, even better. And like, why would you want to fix something that's already been working for you? Yeah, don't make that mistake. Just master one model that you know that works, and yeah, just get master of one thing. And why would you need to fix something that's already working? As you can see here, I was learning about volume profile, order flow, CVD, and yeah, here we have the absorption. CVD took this high, and on price didn't, so sellers are in control. They're absorbing these buy orders, and I was targeting this point of control. That's basically where the most volume is, what price was most traded. But also on TradingView, CVD, it's fake. It doesn't uses real orders, real data. It measures it by a tick or something like that. But on trade, if you're going to use CVD, but as I said, like just master one model, CVD on TradeOvate is way better. Like it's real data and it shows you real volume and yeah, what price is actually traded most. On TradingView, it's not like that, but it's close. Like it's not completely fake, but it's close. And yeah, I was learning about this. Like I was making my own rules when I was a job. I work at a call center right now. I'm currently a student, so I have a student job. I was while I was working, I was actually building my own model on asking Gemini, writing all these rules, and I learned a ton. Like it was not pointless. Like it still helps me right now, even if I don't use these confluences. But yeah, as you can see, if you want, you can pause the video and read it all. It can help you understand how the market moves. But yeah, it's not necessary that you know this. Yeah, let's go back. As you see, I started collecting those losses because I was learning. It's basically a whole new model. Like I was using inverse value gaps and all the things I used before, but I added this and it completely destroyed my executions and how how I was looking at the market. I was just putting all of my focus into that one thing, into that one indicator or tool. How can I hold this volume profile? And yeah, I also added, like later I added VWAP, these bands like standard deviations and things like that. As you can see in this screenshot, like if I didn't use VWAP or this volume profile, I would never short this shit, because VWAP acts like a magnet. And yeah, but these are all new confluences to me. So yeah, even now I know that this is an uptrend, like it doesn't need to go to this VWAP. But yeah, you don't need all of these things. Just use a simple model that works and that's it. You don't need to overcomplicate it. So here's the strategy that I'm currently using and that I've been using this whole time. But yeah, I'm back to it and gonna put my effort to mastering this concept to the literal perfection. So yeah, A plus setup always needs to have meaningful liquidity sweep. So it can be an equal highs, equal lows, liquidity on a higher time frame, or if it's like some unmitigated 50-minute, 1 hour, 4 hour daily fair value gap, we can wait for price to get into this zone and look for reaction. If we get a strong bounce out of it, then I enter and I target next liquidity. So if it's web sell side liquidity, I'm targeting buy side liquidity and otherwise. So yeah, delivery from some fair gap on the bigger time frame. As I said, like I want to see some price getting into that untapped fair value gap on a higher time frame, and then we can get strongest reaction from meaningful liquidity to target. So on the opposite side, and right timing. So I only trade New York AM or PM session, and I wait for a FVG on a smaller time frame for my entry, so 1 to 3 minute time frame, and no other fair value gaps in the way to your take profit target. So in that leg, you want to see only one singular fair value gap, not like fair value gap. So let me open trading view. So what I want to see is price doing something like this. Let's say like this. We tapped into the higher time for fair value gap, and I want to see a reaction like this. So let's say this is our unfilled 1 hour fair value gap, and here we get the inversion. As you can see, here we get the inverse fair value gap as our entry. We enter here, and we target buy side liquidity. Let's say there are equal highs right here at this level. So that's an example of an A plus setup. And here we only have this fair value gap, and let's say this is fair value gap on 2 minute time frame. So this is fair value gap on 2 minute time frame, and we are just entering when it inversed this, and we don't have like some small fair value gaps like here. It's clean, and that's an example of a really good setup. So yeah, also, like as I said, untapped 1 hour, 4 hour, and daily fair gaps are strong targets for continuation and strong zones where price can reverse when reached. And also SMT divergence can add extra confluence, add extra confirmation. Like if, let's say, Nasdaq swept this and entered this fair value gap, but ES didn't, ES failed to make this sweep, then we can also enter, and it shows us that the market is really bullish. And yeah, so yeah, that's gonna be it for this episode. I hope you learned from me something that can help you, and yeah, let's get to that payout. See you in the third episode.